Good morning, good afternoon, good evening, whatever time zone you happen to be in. Welcome to our weekly XRP Army News Community Channel. Maybe I need to shorten that. Weekly roundup. Tonight, I am more excited about being able to introduce and listen and learn from these two gentlemen than any other live stream that I've ever done. I'm more excited about where our wonderful Ripple and XRP and cryptocurrency are in the world in the mass adoption. And I'm going to give everyone a special treat tonight. I'm going to speak very little. And I'm going to let Jerry and my new friend Clinton, who did a wonderful moment in time that was released today. And I hope everyone got to watch that to get to know him a little bit better. And then I invited Jerry Hall, who is one of my best friends and a person that I take wise and loving counsel from, because quite frankly, sometimes I need it, as he well knows. So he is one of the smartest people that I have met in my crypto experience. And so now with that as an introduction, I encourage all of you, and hello, Brady, I encourage all of you to ask as many questions as you can. We've got a few the pre-made questions that Jerry got from some other people. And so that's basically my introduction. And I'm going to kind of just lurk in the background and monitor the comments coming in. And let's have a lively discussion and learn a lot from these two very smart gentlemen. All right, so Jerry and Clinton, would you two like to introduce yourselves?
Well, sure. I'm Jerry Hall, investor, retired, contractor living in Costa Rica. Obviously, I have a YouTube channel and a presence on Twitter and Facebook as it pertains to digital assets and investments and investment strategies and thinkings along those lines.
My name is Clinton Donnelly, and I'm a international expert on the U.S. taxes. I have clients in 48 different countries, including Costa Rica. We have also, but I'm recognized right now as one of the top specialists in the U.S. on the reporting of cryptocurrencies on your income taxes. I have a company called cryptotaxaudit.com, and we specialize in defending people that are being audited by the IRS. We have 5 people. Actually, I've had numerous more people call up recently because they've gotten Coinbase 1099s and a call from the IRS. So yeah, very excited here to talk to you about taxes, about cryptocurrency, and it's an exciting topic.
Well, let's get ready to kick this sucker off. So obviously, Clinton, this is a space fraught with misinformation, right? Many of us, even those of us that have had kind of a grip or an understanding of taxation and tax liability going through our normal life, the introduction of this new digital asset space, it means so many things to so many different people. But at the end of the day, it's what the IRS thinks it is that matters when it comes to tax liability. So you ready for some questions, sir?
Yes, let's have some fun.
All right. So obviously on the topic of cryptocurrency, and particularly for this audience that likes, understands, and most likely has investments in the XRP token, the big topic has been this Spark airdrop. Now, they're going to take a snapshot tomorrow. They have a schedule where they're going to divvy these percentages of the airdrop to the XRP holder destinations. From a tax liability standpoint, Clinton, what is our tax exposure for this? What is it categorized at in the eyes of the IRS? And how should we, the holders of these new assets, address it in our minds looking forward?
That's a great question. So tomorrow during the snapshot, that is not a taxable event. There's no tax caused by the snapshot. The tax is going to occur when you actually receive income. Actually having the airdrop of the Spark tokens, that is going to be when income occurs. And to my understanding, there's a 15% drop, I believe, starting next month in January. And then every month there is a little bit more trickling out over 30 months, more or less. So each time that happens, you have income. How much is that income? That income is the fair market value of the coins on the date that you receive it. How much is the tax? The tax is your ordinary tax bracket times the amount of income that you receive. So what's your tax bracket? 22, 24, 32%, something else. That times the value of the airdrop that you receive is how much you're going to owe in tax at the end of the year. Now that tax would be due for the tax year April 15th, 2022. Okay, so it's out a little bit, but you should be saving money for that inevitability.
Well, let me ask you this. So in the eyes of the IRS, speaking specifically about the Spark airdrop, are they looking at it as they would look at a dividend or interest payment if it were a stock that you owned and you were receiving dividend income?
Yes.
Okay, so let me ask you this. I am fairly certain that this is still accurate, but of course you're an expert and you're going to correct me if I'm wrong. Don't I have a $38,200 a year dividend income allowance before it becomes taxable?
You're referring to the 10%, the 0% tax bracket. That's what you're alluding to.
So students, people that are retired on Social Security, people who generally don't file income tax, but may be thinking because of this, they may need to.
So look, you have the way your taxes are done, you add up all your sources of income and it's taxed as ordinary income. The only income that's not taxed as ordinary income is capital gains, long-term capital gains. Everything else is considered income. Now, it might be dividends, it might be a pension distribution, or it might be a massive airdrop of Spark, that you have to pay on.
Okay.
So yeah, the 0% tax bracket does kick in, but it's reasonable. I mean, and most people who are able to invest are not in the 0% bracket.
The only one I know lives in Costa Rica and does a YouTube channel.
Well, that's true. Hey, now the really challenging question, Jerry, is what is the fair market value of Spark? We don't know. I was talking to Brad Kimes just yesterday about it. I said, Brad, what do you think the value of Spark is going to be? And he said, I don't know. Will it be $5 a token? Will it be 50 cents a token? Be 5 cents a token? We don't know. All right. And so the IRS came out with this revenue ruling, 2009-14. This came out October of 2019. Airdrop is income when you receive it. And when they said this, they got just denounced by the international community, the crypto community, because it was ignorant of the marketplace. Nobody knows what the value is of a coin on the day of an airdrop. In fact, the Internal Revenue Code has a description in Section 170, which says the fair market value is the price that a knowledgeable buyer and a knowledgeable seller would agree upon if they had complete information. Well, on airdrop day, all right, the 15% airdrop day next month, everybody's getting Spark, but there's not a lot of people selling it, and there's not a lot of people buying it. No, in fact, there's very few people doing that. We don't know what the price will be. It'll take some time, and it might take more than a month before that price stabilizes at a point where we can say this is the fair market value, which raises the question, well, how much income did I make on that first airdrop in January? And this is a really complicated question, and IRS guidance has been useless and it is ineffectual. So you have a choice when you do your taxes a year from now. How much will you declare the value of the income that you received, especially here in the first few months of these airdrops? I'll tell you, you have two choices. One choice is you wait a few months until the price stabilizes. Let's say it stabilizes at 50 cents, right? And then you go back and say, that airdrop in January was a 50-cent airdrop, right? Now that's the price I'm going to call it. The other alternative is to simply say, there was no market value for that coin on the day of the airdrop. There was not a meaningful number of people buying and selling. Therefore, the fair market value was zero. All right. And I think there's a good argument that the value is zero. Now, what happens tax-wise on these scenarios? When you say, okay, these Spark coins, I'm declaring them as 50 cents of value, and that's my income. Okay, I pay tax on the income. But then let's say towards the end of the year, I sell those, right? The cost basis is the price I decided I bought them at. I got them at 50 cents, right? So if I sold it for $2, I made $1.50, okay? If I take the position that that Spark airdrop had zero value in January, I'm going to treat it as zero income, then the entire price up to where we sell it at $2, that's a $2 gain, subject to the appropriate tax rate, which would be short-term, would be your regular tax bracket. You held it more than a year, it'd be long-term capital gains, and you'd get usually around a 15% tax bracket.
Excellent answer. Scott, would you be so kind as to table Wade's question? We'll come back to that and pull up Scotty Dog, who brings up a great question that pertains exactly to what we've been talking about right now, and that is, Clinton, so let's say I have a crypto IRA and I have XRP in it, and the IRA folks have said, yes, we're going to support this airdrop. Therefore, all the XRP that I have in this shelter, this Roth IRA, is the Spark is going to the Roth IRA.
Well, there's no tax on the IRA. Okay, so the IRA will receive the tokens. It holds the tokens until such time as you have a later distribution. So later this year, next year, whatever, when you receive it, at that point in time, that portion of your IRA that did not have, that was not qualified, that was tax-free when you received it, then there's the tax applied to it at that point.
So actually walk me through that. So it sounds to me by your answer that yes, in fact, there could be a taxable event with Spark tokens in my IRA at some time.
Yes, at the time that it becomes, yes, it would be taxable to you at the time that you receive it. That's the time it would be taxable. That portion of the income because IRAs, there's two different types of IRAs. One where the tax was already withheld, the Roth style, and the second one is where the taxes have not been taken out and it's growing tax-free, so to speak. So in this scenario, when I take it out, that portion of the money that had never been taxed is now subject to an income tax. Yeah, and it's taxed as ordinary income.
Yeah, my understanding of IRAs, you're going to pay the tax prior to the entry into the IRA, and then disbursements upon maturity are then, of course, tax-free. Okay, great question. I have another one here for you real quick, and that is this. When does, and this comes from Bill Bean, a Twitter contributor, person who watches all of our different channels. When does income transition to long-term capital gain? Like if he's got income coming in the form of, let's say he's got assets on Nexo or Celsius or BlockFi, they're generating him a passive income. He's tax liability for that income. When does that turn to capital gains? When he sells, he has to actually sell it, liquidate the asset?
So we're confusing two things.
Okay, so that's what I thought.
Right. So I have some coins, and I put it on like BlockFi, Nexo, whatever. I hold it there. So those coins are aging. Capital gains is a tax on the gain, of course. The coins that you receive because you know as interest income from having left it there, that is interest income. Okay, so interest income is taxed as ordinary income at the time that you receive it. Now, once I've received these coins, now it becomes part of my investment portfolio. Okay. And as it appreciates, it now has gain. What's the cost basis? The cost basis is the price I paid for it as income. And then once you hold an asset over a year, then it benefits from the long-term capital gains tax bracket, which is for most people 15%.
Excellent. So same scenario. So that I'm wrapping that bow on that particular topic, if I'm earning interest in the form of the underlying asset and I don't take it, I leave it in the account compounding, then as long as the interest that I earned on January 1st, 2020 isn't turned into anything January 2nd, 2021, it's a long-term capital gain if I liquidate it. Anytime before that, it's going to be considered income.
Yes.
Okay, got it. Wade Hutchins, thanks, Wade, for chiming in with your question. Wade asks, how can I set up a company, AKA, to save taxes on my crypto? Now, we're so fortunate to have Clinton here. He is a licensed tax attorney. So not only is he a tax expert, he's a lawyer. Is part of your business, Clinton, setting up LLCs and or irrevocable trusts and things of that nature for people?
No, I don't practice law that way. The easiest way to do, LegalZoom, fantastic service to create a company. Companies are the best places to create companies. Personal company, an LLC, most commonly would be Delaware, Nevada. Wyoming has its benefits, but I like Delaware the most. The use of an LLC for a company for owning cryptos is not, there's not always a benefit. Let's break it down. If you have a single owner LLC, that LLC is taxed. The IRS looks at it, disregards the single owner LLC as being separate from you. It's just an extension of you. All right. So it's all the income and profits all treated like it's yours. So I haven't really created any difference in the tax treatment with a single member LLC. If I have a multi-member LLC, let's say instead of an LLC, I create what they call an S corp, which is a very common, small business corporation. The investment income still comes to me and is taxed at the same rates. The only time I'm really getting a benefit is when my company is generating income from some sort of trade or business, such as in a crypto space, such as mining, where I actually have an expense and it's generating some income. In that case, the income is business income. It's not investment income, from capital gains. What happens there is, if you have it as an LLC and you have mining income, that income is subject to self-employment tax. Self-employment tax is same thing as Social Security, FICA, Medicare, all together. So with a S corporation, what I can do is restrict how much of that mining income is subject to self-employment income. I have to take my income and say, oh, this much is from labor and the rest of it is from dividends. I'm actually the profits of my company. The profits are not subject to the self-employment tax. So this is the area where an LLC would make sense. But if you're not doing that sort of activity where you're actually engaged in some sort of crypto trade or business, then an LLC just adds complexity to you.
Well, like in coming from a tax perspective, that clarity, I just want to say thank you. I wasn't aware of that. There are advantages to LLCs and to trusts as it pertains to liability and court actions. And I mean, there are a lot of benefits that might not have anything to do with taxation, but from liability.
But nobody's really worried about liability on cryptocurrency investments. They're not going to fall off the shelf and hurt somebody, right?
No, but if you're driving a car and you hit somebody and it was found that you had a vodka Louis, and they see that you as an individual have a few $1 million in assets, a lawyer would go, let's go after that person. Whereas if that very same person who had a vodka Louis and hit somebody, and that lawyer would go, well, the LLC owns everything. He doesn't really have much. Maybe it's not going to be advantageous to try to create some kind of litigation.
Right. You're probably your safest angle is that the lawyer never knows that you had cryptos in the first place.
Okay.
He's never going to know.
All right. Wade, do you think we answered your S Corp question? Do you think that got addressed? All right. How about this? There are a lot of people talking about the potential of moving outside of the United States when their investments have matured to such a place. Let's talk about moving outside of the United States and the jurisdiction of the IRS as it pertains to U.S. citizens, whether they're in the United States or some beautiful tropical island.
Yes, this is a good question. My first book was on foreign earned income. Hey, as a U.S. citizen, you are subject to taxation on your worldwide income, regardless of where you live in the world. All right, this is an inescapable fact, and the IRS will find you. If you live outside the United States, there is no statute of limitations on the debts if you owe the IRS. Okay, so this is IRS is not to be messed with, even though you're outside the U.S. So if your goal is to reduce your tax exposure, especially if we're looking at maybe a one-time or a short window windfall, say from XRP or selling my Sharp, whatever, are there meaningful things I can do to reduce my taxes? Well, let's break it down. First of all, the simplest thing you could do is possibly get out of the state that you're living in. If you're in California, I mean, it's time to leave. All right, they have not earned a chunk of your wealth. All right, so leave that. And there's 9 states in the U.S. that do not tax your personal income. So consider one of these: Nevada, Florida, Texas. All right. The second strategy is, having taken my state tax down to 0, can I do better on the federal tax? With the federal tax, your best tax haven is moving to Puerto Rico. There's a special arrangement with Puerto Rico. Any of your income that is derived from Puerto Rico, and if you're a member of the Act 60 registration that they have there, then it is a 0% capital gains tax. So,
Me gusta Puerto Rico.
Hey, now Puerto Rico is, it's still kind of part of the U.S. and but they're a territory. They've got this really unique piece of the code, right? Of tax code, where if the income that you report on your Puerto Rican tax return does not even show up on your U.S. tax return, you still have to file one if you have income. It doesn't even show up there, right? This is exciting. If you're living this is the easiest tax break that you can get. Now, let me just dig into that a little bit, because
Clinton, if you listen really closely, you can hear the price of real estate in Puerto Rico going up as we speak.
Oh, hey, the real estate in Puerto Rico is pretty cheap, unless you want to live where all the gringos that have cryptos live, and then it's a gated community and it's higher price. Hey, so here's what's involved, just not to trivialize this too much. You got to move to Puerto Rico. If we move to Puerto Rico today, all right, so still the 11th of December, my residency in Puerto Rico begins that day. I actually have to stay in Puerto Rico 6 months to get what's called the bona fide Puerto Rican resident status, but the effective date is the date I put foot on soil in Puerto Rico. All right, now, as a part of what they call the Act 60 program, you get to you have to pay $5,000 for annual renewal, $10,000 donation to Puerto Rican charities each year, so that's $15,000 out of pocket, and within 2 years you have to buy a home in Puerto Rico. That you have 2 years to get that done, and it has to be a home that you live in and that you don't sublet. So now, once I've established residency, do I have to stay in Puerto Rico? Here's how that rule plays out in short. You can go back to the U.S., but you cannot be in the U.S. more than 90 days during the year. You have to be in Puerto Rico at least 1 day more than you're in throughout the year.
Oh, so it's 90 days out of the total 360.
Yeah, that's quite generous.
Okay.
Because when I mean, you're in Costa Rica, but especially when you first relocate out of the country, you have to go back to the U.S. to take care of banking and things like that. So this is a great arrangement. 90 days is quite liberal, but there's the second rule. You have to be in Puerto Rico at least 1 day longer than you were in the US. So if you're in the US for 30 days, you have to be in Puerto Rico at least 31 days. The rest of the time, you can be anywhere you want in the world as long as it's not a US territory.
So let's say I wanted to come back to Costa Rica for a few months. No problemo, senor.
Exactly. You can still keep your place in Puerto Rico. You're basically, or in Costa Rica, you're going for basically 6 months to Puerto Rico. You start your residency, and after 2 years, you're going to have to buy a place. But I think we're kind of expecting XRP to peak in 2 years. So let's talk about how that tax break works. Okay. You've got a bucket load of XRP that you bought at 5 cents. Okay, and it's really gone up now. It's 60 cents, right? Now you then go to, so here let's call it 60-cent XRP. You go to Puerto Rico, and next year you sell. All right, when the XRP is worth $2.
Okay.
So how does that get taxed? Well, the portion of your gain from 5 cents to 60 cents that was earned while you were not in Puerto Rico. So we call that U.S. income. The income from today, 60 cents up to wherever it is, $2. That $1.40 gain is considered Puerto Rican sourced income, right? Because you now have Puerto Rican residency, even though you might actually be back at your pad in Costa Rica, right? So here we got this. That much is subject to 0% capital gains tax, but the gain from 5 cents to 60 will still be taxed under U.S. tax return. You have to file that every year. So we call that a bifurcation, where I split my investment. A little bit is still subject to tax, but I think we're all expecting the gain. Now, if you're thinking, wow, XRP has already gone to $2, I'm going to move to Puerto Rico and sell. That doesn't make sense, because all your gain up to $2 has been in the U.S. It doesn't do any good to move and sell.
Unless you don't sell it and you hold out till $5 or $6 or $10.
Exactly. So this is absolutely, Puerto Rico is America's tax haven. It's America's Isle of Man, Guernsey, Seychelles is Puerto Rico. That's the sweetest, easiest, above board, and the U.S. government wants people to go there because Puerto Rico is bankrupt. And it's got a lot of problems, and it needs your money. And I hear the people down there love it. It's great.
It's a beautiful place. The people are gracious. The tax haven, as explained by you and many others, is very attractive and advantageous. Scott, could you pull up Gary's question? It's very yes, Gary's question. Oh, okay. It was a follow-up question. Yeah, there you go. This is back to the business in the LLC question. What if the business is a software development company that uses XRP, uses a digital asset?
So, well, I guess this is a question about the owning it in the corporation. It's a trader business, so that would be good to have in an LLC. If it's an S corp, that portion of your business, which you could relate back to a reasonable compensation for your own wages, would be subject to self-employment income. The rest of the profits you take out of the company are not subject to self-employment tax. Self-employment tax is about 15%. Okay, so that's a big enough amount that you want to avoid. So I'm not 100% sure where he's going with this question. That the company uses XRP.
Well, his question was really coming from a place of XRP. He's holding a ton of XRP, and his business is software dealing with XRP, and the XRP is about currency, not property. But I don't think his intention has anything to do with tax code.
Okay. What do you think the question means to you?
It means to me, I think Gary was hoping that there was some loophole, that if his business used XRP as a currency, that the XRP that he has and is liquidating would be viewed as currency used for the business. Like if you're a carpenter and you buy lumber for your business to build a shed, that's one thing. selling your XRP and having it turned into dollars is another. I think he was hoping that it would be viewed differently, but I think no matter what the situation is, you're saying cryptocurrencies are looked at as property and they're going to be taxed as such. It doesn't matter what you use them for.
Right. So he basically saying, I have a company and it has an inventory of assets. These assets happen to be XRP. And I use them in my company. Maybe I'm trading back and forth with them, in which case there's still a capital gains recognized with those. Okay. And I think that would, yeah. He should go to Puerto Rico.
Can I use my XRP as startup costs when forming my LLC? Does that
have any tax? So what he's doing with the XRP, basically, he's paying expenses using XRP. Not really. He's paying expenses probably using US dollars, but it doesn't matter. We have a tax return is done in US dollars as the functional currency of the tax return. Everything on the tax return, even if I'm trading in euros, I have to express it in US dollars. So when you say I use XRP for startup costs, we have to look at what the US dollar value is of that, whatever we paid for with XRP, and then you treat that as a startup cost on the tax return.
Great. So, okay, this is a great question. It's being brought to us by Wade Hutchins. Whether it's XRP or BTC or whatever it is, if a regulator comes out and clarity for the asset is derived from the regulation, i.e., for instance, let's say 6 of the 8 regulatory bodies all agree that this asset is a currency. Can that information be taken to the IRS and reclassified that asset, or are they are beholden to no other regulators? They do whatever they want, and until they change the classification, the tax code's the tax code. How does that work? Do they interface with these other regulators and take their cues, or?
Well, with administrative law, these definitions are limited only to the section of law that they apply to. Just because the Securities and Exchange Commission wants to classify it as a currency, that the Office of the Comptroller, which might be part of the Department of Treasury, but the Office of the Comptroller wants to define it as currency for its purposes, does not have any bearing on how the IRS handles it. So the IRS has its own definition.
That's that we put in the sound effect. Wah, 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 wah. Okay. How about this? Myraza. Hi, I just joined in. My question, how do money transmitters treat XRP for tax purposes? Trading stock?
For what they do is they have a different tax treatment. It's called trader tax status. So basically, cryptos for them are simply inventory that they move back and forth. And they're not investments for them, all right? With trader tax status, which actually can be available for high frequency traders, typically not XRP people because they don't do high frequency trading, but other high frequency traders could benefit from trader tax status. With trader tax status, a couple things. Pretty much everything I do is short-term gain, right? I'm still calculating the gain. I also do a mark-to-market valuation of my entire inventory at the beginning of the year and the end of the year. So if there's a net gain, I pay taxes on that then, even though I haven't sold those coins. One of the massive benefits of tax trader status is that I'm not limited to the $3,000 loss write-off for a large loss on your regular tax return. If I lost, $100,000, I can take that entire $100,000 off on my tax return if you have trader tax status. And that's how money traders do it.
Or break it up and carry it forward into future years, various pieces of it?
No, I think it's well, what happens if you have excess loss is you can do a net operating loss carry forward.
Okay.
Which is a little bit more flexible.
Let's hope none of us ever have to even address that particular issue. Okay, Scott, Scott, chime in, because I'm not sure what you want to do with this. 2 pitfalls are having sudden wealth syndrome.
Right. What I'm asking is, from your 2 business backgrounds, we're all familiar, and it's kind of a warning to help educate people to really listen to what we're talking about, because it's, it might not be as exciting as listening to a news video that is talking about how we're going to moon. But the cold hard facts are that unfortunately, a lot of people, if we get sudden wealth and XRP does go to the moon, what's going to happen to those people's lives if they don't take what Clinton is talking about seriously? And the reason that I wanted to bring him on was because I wanted to be able to help people understand that if you get a big sum of money with XRP mooning, you better listen to somebody like Clinton if you don't listen to him, personally. But how important it is to be able to take care of your money and take care of the taxes, because you do not want to get with the IRS on you. And so that was the thing that I was trying to get an impression from the 2 of you, is these 2 problems are waiting on a lot of our people in our community if they do not handle these 2 things well. And that's why I wanted y'all to comment on that.
That's a very good question. A lot of people will say a massive misconception that most crypto traders have is that I'm only subject to tax when I convert it to US dollar. And that is incorrect. It definitely is subject to tax then, but you're subject to tax anytime I convert that XRP to any other coin. Okay. So if I convert it to ETH, convert it to Bitcoin, that conversion is still a taxable conversion, and I'm going to have to shell out US dollars to pay tax at the end of the year on that trade. So what I bring that out because of that misconception, particularly after 2017, a lot of people didn't set money aside to pay their taxes in 2018. And the prices, if you recall, in 2018 collapsed from January down. By the time April rolled around, I mean, the prices had fallen severely, and many people could no longer even pay the taxes that would have been owed for these gains that have evaporated in 2017. Right?
I'm still licking my wounds.
now, the best thing to do is, when you make a sale, especially if you held it long term, take 15% of that money and set it aside. Now, you may not necessarily convert it to cash right away, but put it to Tether or some stable value coin that won't erode on you, and just save it. And you don't have, who knows where taxes will go by the end of next year, but save the money as you lock it in.
Absolutely. So XRP can be successfully used for its purpose even without redefining tax code. I'm lost on that one. I'm sorry. I apologize. Yes, Nurse Jean, we covered this in the beginning of the stream. If you'd like real detail on it, Clinton does an excellent job of defining all those elements. So when the show is over, you can go back and rewatch the beginning, because Clinton does a great job. The short answer is the price of the token. How does that get established? Well, the first day, nobody knows. There's no market. However, you want to look at the whole year. Tune in, start this from the beginning, and listen to Clinton's incredible explanation on that. I have another one, Clinton, and it's germane to what we just talked about. I've heard you talk about like-kind exchanging and how you are perfectly suited to help us address that when it comes to preparing our taxes. Take it away, young man.
Oh, yes. I do a lot of like-kind exchange. I'm one of the loudest proponents of using like-kind exchange. What is like-kind exchange? Like-kind exchange is the short-term name for tax code section 1031. If you've heard of 1031 exchanges, that is a like-kind exchange.
Stocker exchange back in the old real estate biz.
Yeah, so
31s.
This is a law that was around from like 1929. It was a long time until the end of 2017. And this law was been around for doing all sorts of exchanges of different types of property for other property that were sufficiently similar character. At the end, and my position is that like-kind exchange of cryptocurrencies for other cryptocurrencies is permitted. Now, after 2017, this law was changed, so it no longer applies to anything but real estate. Right? That's very important. So you and I are talking about a section of the code that's no longer applicable, all right, to the average trader, right? But I mean, I had a guy call up. He's got an IRS agent coming after him because he never reported his taxes in 2017. He had a $4 million Coinbase 1099K that was released in 2017. He didn't report this on his taxes. So I said, here, what we can do is we could do like-kind exchange on all your gain. What happens with like-kind exchange is it is a alternative capital gains treatment. So let's say I bought a coin at $1. It then goes up to $10, all right, prior to 2018. So then at $10, I switch it to coin number 2. And then it goes up to $100 and I switch it to coin number 3. I'm going crypto to crypto to crypto, never going to US dollars. What happens then is that each subsequent coin inherits the original purchase date of the first coin and the purchase price, 50 cents. So so this coin, the cost basis of my coin remains the same, even though I've changed the coin. Okay. This was exciting because you don't pay tax until you finally trade for something that's not like-kind, in which case, US dollars. So what happened for a lot of people coming into 2008? So for 2017, if you don't ever go to cash, you just constantly go crypto to crypto, you don't have a tax event in 2017. Then now you're in 18, right? The law has changed. 2018, I have this coin and I sell it. Well, now I have a gain from whatever the purchase price is or the sale price is in 2018 in this original first coin cost basis that I had. That's what I have to pay a gain on, which could be a much larger gain. But as it works out, 2018, the prices collapsed as much as 80%. So a lot of people the sale price of the coin in 2018 had dropped so low that the net gain between those two it was very small. This is a fantastic way to avoid having to pay taxes on these artificial gains back in 2017. So I've saved people millions on this.
Well, and also as a private individual, for instance, the disparity between 2017 2018 is a great example of how. Isn't it possible to carry forward losses from, like, say, 2018 if they weren't on your tax return, but they did occur? Couldn't you carry them forward to 2019, 2020 as an individual?
Yes, you have a loss with an individual. If you have a net loss, and this is a second very important concept, all right? So, I mean, Jerry, you would be surprised at how many people think that they only have to pay tax on the gains. They think I had 10 trades and 7 of them generated a profit. I pay tax on those. And that's how they calculate the taxes. No.
Right.
I had these 3 that I lost. The 3 of them were maybe real big losers. And when I add them together, then I have either a net gain or a net loss. All right. That's what you pay the tax on, the net. I mean, I've had so many people come. I had a guy, Jerry, he said, I didn't report my cryptos in 18 and I didn't report them in 19, but I need you to do it in 2020 because I made $1 million this year. Oh, okay. And he tells me I had a $300,000 loss in 2018 and I didn't report it on my taxes. And then he says I had a $700,000 loss in 2019. I didn't report it on my taxes. But now I got to pay taxes on 2020 for this $1 million gain. I said, we're going to go back and fix your tax return because we're going to claim those losses. Because then I can only take, this is a shocking part of the tax code. You can only take 3,000 of that loss and reduce your income taxes. The rest of it is carried forward. So in this guy's case, we have $1 million of loss that we're going to report, and then we're going to carry it forward into his 2020 tax return, and it's going to completely wipe out his tax liability in 2020 this is worth, $300,000 to them. This is fantastic.
This is
a key concept.
This is where we do the crypto tax fixer dance. Yeah, baby. All right. Scott brings up a question. I know the answer to this, but Clinton, because you're the expert, you're credible. I'm not. I'm just this YouTube guy in Costa Rica. If people are funding their Roth IRA, let's say with Kingdom Trust or iTrust Capital, what are the taxes going in?
What are they going in?
No, it says, what are the taxes going in?
Oh, going into the trust.
Yeah, going into.
Well, I get the Roth and the non-Roth confused. I believe the Roth is the after tax, right? You're the investment guy, right?
The Roth IRA is everything you put in a Roth IRA has already been taxed.
Okay, so it's already been taxed, right?
No deferred, you cannot put deferred tax dollars into a Roth IRA. It's impossible.
So
they won't let you.
Right. So you have already taxed money. So that means all the gain is, in a sense, not subject to that tax here. So what are the taxes going in? There's no tax going into a Roth IRA. You had to pay tax on the income when you earned it, but the act of putting it into an IRA has no taxable impact on it.
Right on. So we've hit my questions. I'm browsing through the chat to see if there's some new stuff. And I don't see anything. Scott, you have a tax question for the tax fixer.
Yes, I just posted it. So in other words, let's say that there was a person that went to a Roth IRA with iTrust Capital or whoever. All right. And they funded the max amount, $7,000. Clinton, would they backdate any tax liability and have to go back and amend the 2019 filing if they had done that in February, let's say? You see, you understand my question?
Well, so where did the 7K come from? Let's say it came from his job. All right. That income, when he received it, was already subject to taxation. So there's no tax for putting it into an IRA. Hey, and I'm not sure what your thoughts are on this, Jerry, but the U.S. has developed a certain amount of investment vehicles that the government has blessed, like IRAs, 401ks, and like a 401k, a pension plan that you're saving. I don't know what the current amount is, like $15,000 to $20,000 a year for your retirement. Most people can't live on that, so that is an inadequate amount to set aside. And the second problem I see a lot of people do with IRAs and 401ks is that they've been saving them up, and then they finally reach that point in their life where they sell their house and they decide to move to, Costa Rica or Puerto Rico, whatever. And the first thing they do is they take a bunch of cash out of their 401k. They will take a staggering amount of money out of their 401k. They come down and they move to, I've seen this guy when I've lived in Panama. People come down, they'll dump $300,000 out of their IRA and then buy a house. Well, that IRA, a lot of that income is going to be subject to income tax at the time that you receive it. So all of a sudden you've put yourself into a $300,000 income tax bracket. For many people, that's actually a higher income tax bracket than if they had never put it in a 401k to begin with. So, and then if you take the money out before you're 59, then they whack you with another 10% tax on taking your own money out early. All right, which the IRS and the government deserves not even a penny of that. And I personally am a contrarian, and I'm not really excited about IRAs or 401ks. I mean, if your employer does a match, that's a great way to pick up a little extra cash. But I'm a little bit of a contrarian investor on these things. It's better to own that money and have your own control over it, in my opinion. Well, a lot of these investments, are not like like you put your money into a Fidelity 401k, they got you so you can only put it into certain funds, and they're not providing as much profit out of those funds as they could as if you were truly self-directing it.
Well, here's the thing. So keep in mind that these vehicles were created by greedy Wall Street. First and foremost, that's the foundation for everything I'm going to talk about going forward. So
I accept that.
So anytime you start looking at any kind of vehicle that is about investment, it's upon you, the investor, to understand what you're doing. The Roth IRA is the only product that I'm aware of that I can put my dollars into and receive tax-free distributions upon maturity, whatever that is, whether it be my 58-year birthday or 50 years old and I declare my retirement early, what have you. Everything else is tax deferred. So it doesn't matter if my employer matches me 3%. I'm going to get taxed on it when it's dispersed to me. And then the other element of these things are people don't tabulate the costs. There is no 401k. There is no mutual fund. There is no retirement vehicle that does not have administration fees, management fees, a fee because the day of the week ends in Y. That's being sarcastic, but you get my point. If you start really diving into the costs of these things, it doesn't take a lot of calculus to figure out that 4, 5, up to 6% is being doled out to the fat cats that created these things and that are managing.
It's the first 6%.
To your point, oh yeah, that has nothing to do with the taxation liability on the back end when you start to get your disbursements. So I agree with you. The goal should be for all of us to increase our financial literacy, become knowledgeable investors, understand how we relate to IRS tax codes, to investment vehicle structure, and make the decisions that are best for our goals to produce the results we want for our families. And that's what my channel is all about. Clinton, I know you're doing that from your end as far as all the contributions you do to the various YouTube channels around who invite you to come on, your contributions on Twitter. That's really the thing. And I think that as the investing public, right, Joe Sixpack becomes more financially literate and understands these things, then the choices that they'll make will be in their best interest. Right now, that whole system is not set up really to serve those people that are working hard and contributing. They're set up to benefit Wall Street and the firms that create them.
That's excellent insight. I completely agree with you.
It's the truth. And what they do is they placate. It's like, and I'm not trying to create a conspiracy, but they would rather us just go do our job and contribute. Here, take this much because it's for my retirement. And I'm going to, no. You can't get better performance than you managing your own money. So that means you got to become educated about how to manage your own money. Mm-hmm. And a lot of people, face it, if you're educated in the United States or in Europe or any country on the planet, financial literacy is not a course in grammar school, high school, junior college. For the most part, university. It's just not a subject that is in academia. We have to learn it from each other.
And it's so true. I talk about taxes. You go through high school and nobody ever teaches you how to do a tax return.
Nope.
They don't even teach you how taxes work. And this ought to be a basic life skill,
Yes, I agree. Yeah. I mean, I think it's important to know when Napoleon got crushed at Waterloo. I think that's a neat little thing to understand. Boy, wouldn't it be a much better life skill if I had a semester on being a citizen and paying taxes and understanding them and how to and how to even comprehend what they are, let alone, how I interact with them on a daily basis, whether it be through sales, income, property, etc. Yeah, I agree 100%.
Well, I think your show is a great thing because so many investors with cryptocurrencies, this is their first really big area of investing in their life. The
Right.
taxes and saving and how to manage the notion that investments might go down and how to have an investor's emotional response to these things. These are basic skills that's great that you're teaching people on.
Well, and for those that haven't caught it, I have an incredible I'm plugging my own show here, but on the Jerry Hall YouTube channel, I've got an incredible Beyond Moon episode with Clinton where we go over all kinds of tax stuff. And it's about educating investors to, hey, listen, most of us are going to experience wealth in a way that we've only dreamed of before. And so there's going to be a lot of things that come with that, emotional responses. But also, why don't we tactically prepare ourselves? And that is, some of us are going to need to build teams. Like, in full disclosure, Clinton is going to be my guy. When it comes time for me to deal with my monster wealth, I'm not calling anybody else. I'm calling Clinton Donnelly. Now, I've already made that choice. I'm not asking you to, but you're going to possibly need professionals, whether it be your licensed tax attorney, whether it be your wealth manager, whether it be somebody who's going to structure a trust for you, or living wills, or executor plans, insurance protections to cover liabilities and things that maybe you've never had to worry about before because you've never been worth millions of dollars before. But there are things to spend the time now looking and learning and understanding before you get to that place where, oh shoot, I wish I would have picked up the phone and called Clinton Donnelly. I really wish I would have done that.
A lot of people, TurboTax is a great software product, and people squabble over the price of TurboTax. For $100, you're getting incredible value. For most people, that's all they need. TurboTax is not designed for people with complex tax situations, but when you do have a more complex tax situation, a good tax preparer is going to know how to pay for himself. I've taken people who have used TurboTax and said, "Oh, we can do this, we're going to get it much cheaper," but it also helps you to avoid liability and risk and make sure you calculate it right when in a year when it's very complex. I don't expect all my clients to need my help every year. Some of them, have a large enough financial life that they have me do the return each year. But many just for big years of change, like you described, it's a perfect way to use an enrolled agent firm like mine at Donnelly Tax Law.
Well, I wanted to ask you about that because there are some wonderful services in this space. I happen to really like iTrust Capital. I think there is a time and a place, especially for the younger folks, to consider putting assets in that can mature and can just experience tremendous capital appreciation with no tax liability on the disbursement side when that chronological time comes, or the time where they decide to officially retire. TaxBit, this company that will take and propagate and aggregate all your crypto data and put it in a nice, concise deal to hand Clinton. Have you had any experience with that? People bringing you an outside provider's, what is it called? It's
capital gains report
stuff.
Yes. So when you do your taxes with cryptocurrencies, there's no tax when you buy cryptocurrencies. Okay, let's put that important concept out there. You can hodl all you want. There's no tax. There's only a tax when you sell or exchange it for other cryptos. Now, if you do enough of these, the complication is calculating how much your gain was. And so it only takes like 10 trades, in my opinion, before that becomes a pretty complicated thing to do. So there's services, they're crypto capital gains calculation services. That's the name I give them. TaxBit is a good product. There's also a TurboTax, or probably a Token Tax is another good company that's out there. Cointracking.info is a popular product that's out there, has a nice portfolio monitoring service to it. CryptoTrader.tax is also an excellent, very easy to use tool for calculating your capital gain. So this generates a spreadsheet, or it could be a report, however you do it. But basically, I bought it for this price, I sold it for this price, I bought it then, and I sold it then. Here's the gain. So you're listing it out like that. Then I take that and I would give that to someone who's preparing my tax return, or I would do it on TurboTax. So let's say I ran the results on my, using, as you say, TaxBit, and it comes out, I said I had, 100,000 went in, 120,000 came out, so I had a $20,000 gain. Well, you'd put those numbers in TurboTax when you do your tax return. It'd just be like a one-liner. You put the net amount of everything on there, and then you've done your taxes for reporting the gain. Pretty simple in that way. You should submit the itemized list with that tax return to the IRS, but if you don't, it's not the end of the world.
And it can come back, and there are ways to optimize any particular year based on basis like first in, first out, first in, last
Yes.
out. There's ways to manipulate it. And those sites, all of them that you just mentioned, have some functionality to do that. And the great thing about dealing with Clinton, for me anyway, this is going to be my experience, is that I'm going to present Clinton this stuff. He'll review it and go, you know what, Jerry, thank you. You did a great job. But you know what, check. We're going to scooch this over here a little and scooch that over there a little bit. We're going to eke out a little extra coffee money for you. Hey, I see what time it is, but there is a really great question Channing brings up here. Scott, can you pull up Channing Smithson's any thoughts about debit cards versus credit cards as it pertains to taxation when you're using these platform or exchange cards like Uphold, Coinbase, Visa, debit cards versus credit cards associated to your crypto holdings in a platform?
Hey, so this is a little bit shocking for people. So you take that debit card and you go and buy a Christmas gift for your special other. All right. So you spent $100 on whatever. Now there might be sales tax on that, right? Which is a local tax, or state tax. You pay it, okay? But then that $100 transaction then goes back against my Uphold account, and Uphold immediately liquidates $100 worth of whatever coin I had on stockpile there. So now I've actually caused a sale of coins. This is a capital gains tax that's going to kick in here, because I might have gotten that $100 worth of coin. I might have bought it for $20. So I have an $80 gain there that I have to pay a tax on at the end of the year. So people get riled about this concept because they're saying, wait a second, I have to pay a capital gains tax to get the $100, which then has a sales tax on it. And the answer is, yeah, that's how it works. The capital gains tax is a federal tax. The sales tax is a local and state tax. It's just, we're double and multiply taxed throughout our lives. Your income is taxed, and then you got to use your income to pay your property tax. All right, which is property tax is a wealth tax. People don't like the notion of wealth tax, but that's what property is. You're being taxed on the wealth that you have year after year after year, and that's just they say it goes for helping you paying your utilities and living in a community. But if that community happens to be California, that's an outrageous amount. So. I think I touched all that.
Oh, you got it. You got it. I'm going to answer this question just in a second, but I think I want to put a cherry on the top of the card issues. Debit cards create taxable events. You need to understand that. When a card that you're holding, this debit card, liquidates a digital asset, taxable event. However, if a platform is offering you an actual credit card that is secured by your crypto, using credit is not a taxable event. So I take that very same Visa logo plastic card that is a credit card, put it in the gasoline pump, or buy my sweetie something at the gift shop. It is credit. It is not liquidating an asset to cover the debt, the obligation. Then I am free to use my own personal money from my income to pay down my credit card, or carry the balance forward if I want to accrue more interest on that debt without a liquidation. So if the credit card has a 10, 12% carry debt clause in it, and that's the rate, and my crypto is going up by 20, 30, 40%, you might be able to figure out a way to use credit without liquidating your assets to utilize capital. It's just, I mean, it's kind of advanced stuff. This is not for the weak at heart. There was a question brought up about clarifying a currency issue that needs to be answered. It was just on the screen. I'll answer it. It doesn't matter what the IRS says. It doesn't matter what the Department of Justice says. It doesn't matter what the OCC says. It doesn't matter whatever sitting president is sitting in the White House and says, this is a currency, or this is property, or this is whatever. It isn't until the IRS says it's something that it matters as it pertains to tax code. It doesn't matter who calls what. If the IRS is calling your crypto property and it's going to tax it the way it's been taxing it, there is nothing anybody else. They answer to no one. They march by their own drum. And until they change their designation, it is what it is. It doesn't matter what anybody else says. Is that a fair, quick answer?
That's right. I mean, Congress has not instructed the IRS to treat it any other different way. They've, since 2014, they decided to treat virtual currency as virtual currency, and they're going to treat it as property.
So it's Congress that can actually change the law that creates the tax code law. Congress could come out and say, XRP is a currency, and then the IRS would buckle and have to redesignate it as a currency.
If that happened, right.
Okay,
now, it can be done at a regulatory level. I mean, the IRS commissioner could come out and say, we're going to treat cryptocurrencies differently. But it would be problematic, I think, to do it. They wouldn't be able to do it retroactively because they've already told people it was property. So I had a thought, I lost it. But yeah, I think you definitely hit it. Currency is... I would not. Oh, here's what a lot of people said. Got panicked. I had people call me up when Joe Biden said he was going to increase the capital gains tax rate to 40%. I had people just flip out and call me up, and they go, I can't believe this. And here's an important concept. Presidents, when they talk about tax code, have no power to change it. So he was running for power. He was saying things to placate to go after the poor people to get them to vote for him, because we're going to sock it to the rich people. That's all that was. It was a bunch of baloney. Whereas my father used to say it was a bunch of hooey. So, he can't do anything. He can't change the tax law. Congress has a separate committee called the Joint Congressional Committee on Taxation. So they work together on tax code, and it is not changed in a cavalier manner. I mean, we just had it changed in 2017. The last time it was changed was 1986. All right, almost 40 years. So it does not get changed often because the financial community wants stability in the tax code.
Got it. Wow. So
all right, what's next?
One last thing on the card. So you got a card. It's giving you a cash back in the form of cryptocurrency. When it gives you the crypto, is it like considered income or the airdrop type of situation, or is it something that until you liquidate the crypto, it isn't a tax event?
When you receive it, if you have the ability to, say, sell it shortly thereafter, then it would be considered income when you received it. Income is taxed at your ordinary tax bracket. Yes.
Important to know these things, folks, as you go signing up for your little 2% BTC rewards.
Oh, absolutely. Now this is a very relevant question. Last year on the tax return, there was a question called, did you buy, sell, send, receive, or have any interest in cryptocurrencies or virtual currency? It says virtual currency. And it was hidden on Schedule 1. Not everybody has to fill Schedule 1, so it wasn't as impactful as they wanted. This year, this question shows up on the 1040, above the fold.
At the top.
Right here. It's like, let me just rephrase it. All right. So they want you, what's your social security number? What's your name? What's your address? Did you have virtual currencies? They're asking that question before you tell them your kids, how many you have and how old they are. You tell them that before how much money you made at your job, and there's only one question that they wanted to know, and it's, did you have virtual currencies? Now, this is going to scare the bejesus off everyone, so I'm just telling you, right? While the IRS has escalated this question, I mean, the news media is going to pop when they hear of this in January, right? This is going to be, everybody's talking about this. The problem is the IRS has raised the tension level by putting that question there, but the IRS has not brought out any quality regulations on how to handle cryptocurrencies. I mean, they came out with stuff in 2014, again in 2019, which was abysmal, and they've been silent ever since. I think that they've gotten the boot in the rear and they don't talk about cryptocurrencies. But yeah, they're jacking this question up the front page, but they cannot give us any really substantive guidance since what they recently provided. So a lot of people panic on this question. And let me provide some this is me by a way to look at this. The question is not, do you have cryptocurrency? The question is, did you buy, sell, send, receive, or have a financial interest in virtual currency? What is virtual currency? It is defined under the IRS regulations 2014-21 that as a store of value. So here we had this guy who was getting BTC paid to him on his credit card into probably some account. That is a store of value. If you have frequent flyer miles, that's a store of value. If you go down to Kroger's and buy your groceries and you get shopper points so that you can buy a pan for your mother, that's a store of value. All right. All of these things are stores of value. Therefore, all of them are virtual currency. All right. When people ask me, should I answer this question? The answer is yes. And everybody should answer yes. It's when we stop acting from fear and give the IRS the blunt truth as they've defined it, everybody should answer yes. And when everybody answers yes, that question won't show up anymore.
Hello, hallelujah. And I think, Scott, on that note, I have no further questions for Clinton. I want to turn the show back over to you and say to you and your audience, and of course, Clinton, how grateful I am that you allowed me the opportunity to participate in this, because it's a subject and subject matter that's important to every single one of us in the United States, and even those that are U.S. citizens living abroad. So thank you.
And
thank you very much.
I would like to thank you as well, Jerry, because it was a much more beneficial discussion than if I had tried to do what you just did, because I don't have the background to be able to carry on the discussion that you had, and I knew that. So I'm very, very, very grateful to you that you were able to join us, because you got a lot more information for everyone talking with Clinton than I could have. If we were talking about football, then I could have drawn some of that stuff out from him about football, but not this particular subject. And you improved things by being here, and I deeply appreciate that. And Clinton, I deeply appreciate you too as well. I did want to share my screen real quick with everyone, and I want you all guys to know that I don't push a lot of stuff off on people in our community. I don't have affiliate offers and all that kind of thing. But I did want you to, excuse me, I did want you to see what is on our website, XRP Army News. And the reason that I'm doing this is because I believe in Clinton. And I believe what he has to be able to help teach people and help people with is extremely important. I have been very fortunate that I've never messed up with the IRS, but I know people who have. You do not want to get some money and mess up with the IRS and have them coming after you. And that's one of the reasons why we have put on our website status, and his community poster is something that I believe in passionately. Get things that you can look at 5 years from now and look back on to document your moment in time that we're here. And then the other partner that we've got on
Donnelly Tax Law.
We've got on our website is Donnelly Tax Law.
My favorite, my personal favorite.
Me too.
Yeah. And again, the reason that I'm doing that is because we can get all excited about going to the moon. But I'm telling you, if you don't, I'm not 29, I'm 59. And you just don't want to make some mistakes when you begin to have more assets in your life. You want to learn how to be able to take care of them and increase them. And one other thing that I wanted to mention is a shameless plug. The other day, as a demonstration of cooperation, we got together with 20 people and we started sending video Christmas messages to Brad Garlinghouse. And the reason that we did that is because I'm trying to help demonstrate to everyone that working together and cooperating together delivers more results than trying to do everything by yourself and being in your own little walled garden. And I wanted to share with everyone. Can y'all see that, Jared?
I can. What is the purpose? What result are you trying to produce by sending Brad Garlinghouse a Christmas message?
All right. 93% of people Google. And when they Google, what are they going to find? Well, if we have the ability as a community to place content anywhere in the world that we would like it to go, and then when people are searching, they're going to find basically what the information that we're putting up there. That's a very important thing. And what I'm hoping to be able to have people understand it, we've been using Google and YouTube in a particular way, and that is to receive information. Well, we as a community can shift that paradigm, and we can begin to be a community that is sending messages out to people. And the 20 people that started this little project that we started the other day, I don't know how many of y'all have ever looked at Google page 1 before and ever seen nothing but video thumbnails on the first page. These pages are very, very, very rare. I figured out how to do this about 6 years ago. And so
Scott, let me, so this isn't have anything to do with Brad Garlinghouse or the Christmas message. That's just a vehicle to illustrate that you've designed and created a method in which we as a community can get exposure through what they call search engine optimization to get our message on page 1 of Google.
Correct.
I would lead with that. In the future, when describing this, I would lead with that.
Okay.
Versus the thing.
Well, and one of the reasons that I made it a Christmas message to Brad is because we all love Brad. So that was a convenient topic to be able to use for the demonstration of what we can do together, posting content together. And so again, if we can replicate this thousands of times, and we've got page 1 on Google dominated by the content that we're putting out together in the forms of messages, we can direct those messages. So we're working to get 100 of these. Right now, we've got 35 or 36 people that have done these with us. And so I'm going to stop the share screen so I can see myself talk.
Well, I got that. So any topic that you feel is important. So for instance, if we're talking about something that a legislation may have something to do with, right?
Yes.
Let's say, for instance, we as a community decided to get behind the Token Taxonomy Act. Well,
yes,
we could have 5 different messages for that.
Yes.
100 people do each 5, populate Google search with the Token Taxonomy Act, a plea to Senator this, a plea to Congressperson this, a plea to House of Representative that.
Yeah, and another way I've looked at it is the initial demonstration that I put together was what we can do together, posting content, shifting the paradigm on Google and YouTube that we receive information from those platforms. We could be.
You're tweaking it and giving it so that algorithms are recognizing the content you're putting there versus.
And as a correct. And as a community, Jerry, we could be the first social media group community in the history of mankind that shifted that paradigm that we send information through these vehicles. We're not just watching videos and searching for results on Google. Now, the second thing we could do is, what if we could send 100 messages to Bitcom lady and a nice message saying, Maxine Waters, we would really like to be able to help you understand cryptocurrency better. Well, what if we found out who the top 5 regulators in the USA are, and we send them 100 messages, and 100 messages is peanuts. We've got a YouTuber in our community with 100,000 subscribers. So 100 is what if we had 10,000 people send a message, and all they've got to do, we'll create the videos for you. All you do is send it, and we'll geocode the title so it shows up. All those Christmas messages all showed up in San Francisco because the San Francisco is in the title. So if Brad Garlinghouse,
you can geocode it for anything. So there's geographical coding, there's topic coding. So you code it geographically. You send the same thing out, but you do it geocoding it to 25 different jurisdictions.
Right.
It could be, hey, crypto people, important tax tips. Boom. We do a little 15-minute with Clinton Donnelly. Little 10, 15-minute Clinton Donnelly. Hey, guys, I'm here. I'm Clinton Donnelly. Yes, I am also Donnelly Tax Law, but I'm not representing Donnelly Tax Law. This is an important message for crypto people. If you call me afterwards, that's great. If you don't, that's fine too. But these are the things you want to make sure that you ask of your tax attorney. These are the things you want to be cognizant of. Bump. And what you're talking about is getting it so that it's the number one search topic. It's the number one result, comes up on page 1, whether it's San Francisco, if you geocode it for that, or Washington, D.C., or New York, or Florida, or Puerto Rico, where a lot of us will be in a couple of years.
Yeah.
Okay, I got it.
And again, the idea again is if we decided to flip the way that we see YouTube and Google are being used, instead of seeing it as a way that we're receiving information, we can, as a community, and the upside of this is astronomical. If we decided we were going to send, because again, I know it doesn't look like all that much if you don't really think about it that much, but all of the people watching this and anybody else in the world could spend the next 10 years searching every Google term you want to and not run across another page on page 1, the all page, that is nothing but video thumbnails. And see, individuals can't do it because YouTube will not let you post 10 videos with the same information. They'll let 3 of those videos show up on page 1 probably, but you can't get 10 unless you cooperate. And if we get multiple people sending the same message from different YouTube channels, we can plaster our information out all over Google anywhere that we would like to geo-target it. I would love to be able to send 100 messages to Maxine Waters. I would love to be able to figure out with you, Jerry, who are the top 5 regulators that are going to be considering what cryptocurrencies are going to be all about, and we send them 1,000 messages. I mean, it's not 100 is a good number, but we've got thousands.
This show that you did tonight is value add for anybody in crypto. I don't care if you're a die-hard Bitcoin maxi and every other token is a shit coin, and I don't care. Doesn't matter. Right. At the end of the day, we can guarantee that at some point our life will end. Death will occur.
Yep.
And then the other for sure thing is you can't escape the IRS if you're a United States citizen. Those two things are absolute things you can bet on, right? Take them to the bank. Let's do this with this video. Let's get Clinton's information that he just gave all of us. Let's do that. I'll do whatever you tell me to do. I'll geocode.
Yeah.
I'll do it all. I'm down.
Anything that we feel like will be of value, if we can help people understand that little YouTube channel can send. It's not just to watch.
You're talking about creating a contextual change in the mindset of the community. I get it. I understand it. Bang. Clinton, have anything to add? Any final thoughts before Scott says goodnight to everybody?
I hope we all make a lot of money this year and have a happy 2021.
Yeah, baby.
All right.
Thank you very much, everyone. Take care. God bless. And next week, we will be honored to have Santiago Velez on our live stream. So let everybody know. I know that you watched his interview with Raul Pal, and we're going to be able to have him visit with us next week.
He did an interview on my show and then did a whole live. Santiago Velez is a bolt. And I will tell you, I did my interview with him before Raul did. I was first.
Well, I'm going to be next. And so everyone in the community, make sure that you watch Jerry's interview with him, and then make sure you watch the Santiago Velez Raul Pal interview on Real Vision. And then we'll have Santiago next week. His moment in time will be live Thursday at 9 a.m. And tomorrow we release Thinking Crypto's moment in time at 9 a.m. So make sure and check that out. All right. God bless. And Clinton, thank you. I'm going to do everything in my power to be able to let as many people know about you and what you do as I possibly can. I believe in you, and I want to be able to get as many people exposed to how you can help them as possible.
Thank you so much.
All right. Take care. God bless, everyone.
God bless.